Good morning, traders. Here's your market update for today. So, starting with the dollar index, the US dollar index slipped to around 98.65 on Tuesday, which is a 1 week low, as optimism over a potential US and China trade deal reduced the safe haven demand ahead of the Fed policy meeting. Washington and Beijing have agreed on a framework expected to be signed this week by President Trump and Xi, covering rare earth minerals, soybean purchase, and also TikTok. President Trump also met Japanese Prime Minister Takaichi today to discuss trade, defense spending, and investment. The Fed is widely expected to cut rate by 25 basis points on Wednesday, while Japan and the EU are both likely to hold steady. And technically, despite intraday weakness, the dollar has held above key support between 98.11 and 98.32, suggesting buying interest remains. And the direction now depends on the Fed's tone. Any sign of slower quantitative tightening or stronger yield appeal could stabilize the greenback, and the resistance sits at 99 and 99.14. A break would open a retest of 99.56. However, a failure to hold above the support band would send the price towards 98. Moving to WTI spot crude oil. The oil price hovered near $60 per barrel after earlier dipping to 59.6 as OPEC supply increase overshadowed hopes of a trade deal and also renewed US sanctions on Russia. Earlier this month, a sluggish demand drove oil to its lowest level since May, but stronger than expected US consumption and new sanctions have lent support. OPEC and its allies reversed previous output cuts to defend market share, tempering the volatility but limiting upside. The market narrative remains capacity clearing to supply contraction, eventual price support. While short-term inertia keeps the price capped, medium-term reductions may form a base for the recovery. And technically, WTI faces resistance near the 50-day SMA at 61.96 and the 62 round mark, with the next ceiling at 63.43. Immediate downside targets are at $60 and 59.8, and a break could test 59.24 and then $58. So overall, near-term momentum remains bearish while the range holds between 58 and 62. And next, spot gold. Gold fell for a third straight session on Tuesday, dropping from above 4,000 to around 38.86, which is a 3 week low, as easing US and China tensions cut safe haven demand despite the expectations of a Fed rate cut. Optimism on trade progress and strong equity markets pressured gold, while lingering geopolitical risk around Russia and Ukraine limited deeper losses. Gold surged from 3,800 to 4,400 in early October before investors locked in profits. The correction remains technical in nature, reinforced by improving risk sentiment and higher treasury yields. And technically, gold has been consolidating between 4,000 and 3,864 since retreating from its record high of 3,391. The pattern shows lower highs and lower lows. Resistance sits at 4070 and 4100, and the support lies at 3886 and 3864. A break lower could test 3850. So longer term fundamentals remain bullish and on inflation and geopolitical uncertainty. And last but not least, Australian dollar. The Aussie dollar climbed to 65.90 on Tuesday, which is its highest in nearly 3 weeks, supported by a softer US dollar ahead of the Fed's meeting and optimism over a US China trade deal. Markets expect a 25 basis points rate cut from the Fed, while attention in Australia turns to today's quarter 3 inflation and September CPI data. Expectations for an RBA rate cut have eased to 15% after Governor Bullock said the labor market remains somewhat tight despite higher than expected unemployment. Technically, Australian dollar has broken above its descending channel line, signaling early bullish reversal signs. The pairs traded above 9-day and 14-day SMA, forming a bullish golden cross that supports upward momentum. Resistance stands at 66 and 66.24, and a break could target to 67 and at 67.07. Support sits at 65.10 and 65.12. Below that, we will see 64.43 and 64.38. So that wraps up today's morning review. Keep an eye on Wednesday Fed decision, US CPI data, and also OPEC output signals, all likely to steer short-term volatility. So trade safe, and I will see you in the next update.